Most people we talk to feel stuck. They'll tell us things like, I feel behind. I wish I had more time with my family, or work is draining me. Does that sound familiar? The truth is, it's not that you don't want freedom. You just don't have a clear system to get you there. And without a system, what happens is 3 years from now, you're very likely to be in the same place that you are today. Your kids are going to be older and they won't care that your business was more successful. They'll just remember that you weren't there.
That's why we built the Passive Income Operating System. It's the exact framework we use to design financial freedom for ourselves and for our clients, not decades from now, but today. Now, the system isn't free, but the training that shows you how it works is, and it's less than an hour. So go to infinitewealthconsultants.com/PIOS, PIOS, and take the first step to buying back your time, creating passive income, and designing the life you don't have to retire from.
How does passive income help someone or listeners become accredited faster?
Well, that's a bridge from the income test to the net worth test.
If you're an investor or wannabe and you're ready to build passive income that exceeds your monthly expenses, you found the right podcast. Welcome to the Infinite Wealth Podcast, where we combine the wealth building principles of Rich Dad Poor Dad with the power of the infinite banking concept to help you take control of your money and your future.
Join us as we bring insights from experts and from Cameron, as well as real-world strategies and proven tools to help you create financial freedom without relying on Wall Street. Let's get started.
Welcome to the Infinite Wealth Podcast. I'm Cameron Christiansen, along with our co-host Anthony Faso. And today we're tackling an important topic: what it means to be an accredited investor, why it matters, and how you guys can get there faster. What most people don't realize is that some of the best investments are only available if you qualify, and we want to show you how to open those doors. Faso, why should someone care about being an accredited investor? Isn't Wall Street enough?
Well, it's a great question, Cameron. Accredited status, it opens doors to investments that the wealthy have had access to for years. Private equity, hedge funds, syndications, private credit, storage units, just many more opportunities that are outside Wall Street. So these are often uncorrelated with the stock market, giving you more stability. If you're stuck in the Wall Street only options, you're at the mercy of volatility, inflation, and fees, right? Now, with most of our listeners, Cameron, their goal isn't necessarily to build a high net worth. It's a passive income to be more than our monthly expenses. And if we look at Robert Kiyosaki's cash flow quadrant, if you haven't heard of it, I would highly encourage you to read. My favorite book from Robert Kiyosaki is Cash Flow Quadrants. And what he has is he breaks up everybody's income into 4 different quadrants. In the upper left-hand side, there's an employee. Lower left-hand side, self-employed. Both of those are in essence exchanging time for money. Now, what we want to be on the right side. The right side has the B being a business owner, and an I is an investor. Now, most people's ultimate goal is to get more and more of their income in the I category. And that's what these opportunities being an accredited allows you to do, is to get into become an investor. So if you want to get in that I category, it is crucial that you become an accredited investor.
Great point, Faso. Would you say that there's a risk of not being accredited?
Yeah, you're going to miss out on a lot of cash flowing opportunities that can help create freedom much faster. And then inflation and taxes slowly erode your savings if you can't beat or you can't get access to these better deals. So, Cam, let's maybe define what exactly is, or what makes somebody an accredited investor.
Yeah, a great question. Guys, the easiest thing to find out the definition is to ask the guys that make the rules. So we're going to go to the IRS website. If you go to sec.gov, they actually give you what it means to be accredited. I'm going to read it right off for us. And the first criteria is to have a net worth over $1 million, excluding your primary residence. The
Mm.
second way to qualify is to have income over $200,000 as an individual or $300,000 as a household in each of the prior 2 years, and then to have a reasonable expectation for the same current year. In addition, right below that on the website, there is actually some ways that you can meet professional criteria to become accredited investor.
Well, Cam, does this mean that people that are non-accredited are gonna be left out?
No, not completely. The best and most common way for non-accreditors, accredited investors to invest is to look at the active side. We have spent, we've talked about this many times in some of our previous podcasts, and I would say that if you guys are out there listening and you have a demanding job or maybe family life is demanding at this point or this stage in life, or you're not really excited about rolling up your sleeves and getting your hands dirty, do not go active. But if you choose to do so, some options that we've discussed in the past and we've gone in depth on these is one, it would be residential fix and flips, short term rentals, long term rentals, medium term rentals, ATMs, vending machines, land flipping, slow flips. In addition, we've also got the option of what's called a Reg D 506B.
Mm.
This would be a syndication opportunity that's available to non accredited investors. Sponsors under this Reg D 506B, they're not allowed to advertise. And so you must know the sponsor already. So the best way, if you guys are out there and you would like to explore this option, the best way to do this is to ask. Find a sponsor you like, get to know them, and ask if they have any 506B offerings. Many times over the years, I've seen some sponsors, some syndicators open up a 506B offering, close it, and then do a very similar, if not the same, investment under a 506C offering. So that's one way that you guys, one opportunity for you guys. Now, the other one that I think we've seen, Anthony and I've discussed this previously as well, is that you can actually become a general partner, right? So you can
Mm.
go out there, create your own fund, and become a general partner as opposed to a limited partner. On syndications, there's two types of partners, right, Anthony? I'll explain those to you. One, a general partner is going to handle kind of the day to day operation of the business, and a limited partner is somebody that comes in really just with the money and the capital. And so that's how it gets divvied up. So, one option would be come in as a general partner. And then another option that I thought was interesting that we had a colleague of ours explore years ago was if you guys are non accredited, you can actually go out there and become a registered investment advisor or an RIA. Now, this is probably not a route that I would encourage someone to look down, but you can become an RIA. And just because you receive that credential does not mean that you actually have to solicit advice or offer advice to investors. But our colleague, he spent a couple of months kind of studying for the Series 65. He was able to pass his test, and then there was a few other requirements afterwards that he needed to do, really just on the registration side. But he achieved the Series 65, became a registered an RIA, and thus an accredited investor. So there are some opportunities. If you're not accredited, you're not completely turned out on or completely locked out from some of those investments. But most of the kind of cream of the crop opportunities, the big syndications and institution level deals do require accreditation. Anthony, I got a question for someone that's listening who isn't accredited yet. What's the path?
Well, I would tell you, it really comes down to what I would say 4 steps. We need to grow income and assets strategically. We need to leverage passive income streams, reduce taxes, and reframe your money system. Okay, so let's go ahead and break this down.
Okay, let's start with income. What are some practical ways people can grow their income to move more towards accreditation?
Well, what I would suggest, let's focus on high value skills or businesses that increase your active income. A lot of times that could be a side gig with sales, consulting, or many of those opportunities that you'd mentioned earlier, that we have multiple podcasts that talks about these active businesses. Also, don't just let money sit in savings. We need to use tools like infinite banking to build an asset base that will compound over time. Also, let's avoid lifestyle creep. More income doesn't help if it's all spent, right? Discipline accelerates the journey. And Nelson talks about this in his book, Becoming Your Own Banker, called the Parkinson's Law. And which is, that's one of my favorite pieces of the book, but it talks about oftentimes our expenses rise to income. We get a raise, we end up spending more money. We need to make sure that we are avoiding that.
Faso, you mentioned assets and growing them. How can people grow assets efficiently?
Well, then we need to prioritize assets that produce cash flow, like real estate, notes, and some small businesses. We need to avoid chasing appreciation like speculative stocks or crypto. Cash flow builds net worth consistently. Also, let's use leverage wisely, like
Yeah.
borrowing against an IBC cash value to acquire income producing assets.
Okay. All right. So if someone's just getting started, they have a little bit of capital. Where should they look to create passive income first?
I tell you, what it to me was something that's very important. We need to invest. We need to start with things we understand. Oftentimes, people are just chasing the high rates of return, and they don't fully understand what they're getting into. We're big proponents on invest in what you know. So for many of that, it could be real estate, uh, like rentals or syndications or land flips. Business ownership is a great strategy, either as an operator or as a silent partner. Uh, Private lending notes, they earn interest while assets are secured by a collateral. But here's a key thing, and this is a problem I know you and I have both battled with. That's one of the advantages of this podcast. We see all these great ideas, right? Ooh, ATMs are cool. Let's buy some ATMs. Short-term rentals. Let's do some short-term rentals. Let's flip some land. And the problem is we get spread too thin. I'd
Hmm.
suggest the key is to pick a lane and then scale from it. Don't scatter across 10 things at once.
Man, it is easy to hear a whole bunch of good ideas and just get distracted and want to do them all at the same time.
Mhm.
Great piece of advice. Anthony, I got a question is how does passive income help someone or listeners become accredited faster?
Well, that's a bridge from the income test to the net worth test. That extra cash flow accelerates savings and reinvestment. It builds credibility with lenders, partners, and investors, and then that momentum compounds.
Nice. Taxes, right, is a big highlight for you. They get often are overlooked. How can reducing taxes speed up someone's path to accreditation?
Every dollar you keep, that builds a net worth faster. And using strategies like cost segregation, real estate professional status, or business deductions can save tens of thousands of dollars annually. Now we've seen clients go from barely meeting the income test to well over it simply because they kept more of what they made.
Yeah. Faso, earlier you mentioned systems, and I think you said reframe your money system. What do you mean by that?
Well, I would tell you, most people, Cameron, they operate in chaos. Money in, money out with no intentional flow. That's where the passive income operating system comes into play, where you create a hub where all the income flows through to. We have separate accounts for fixed expenses, variable expenses, investments, and reserves. Now, with this clarity, Cameron, you know exactly how much is available to grow the net worth and passive income every month.
Great point, right? Without clarity, people don't do anything and they just become stagnant, right? But once they have clarity, they're able to take that next step forward. So, Faso, do you have a real world example? Someone who went from someone that took that first step and went from not being accredited to accredited?
I tell you, we have many, Cam. I know you do as well, but we're going to talk about one in particular, Sarah. She's a small business owner earning good money, but her finances were scattered, multiple accounts, multiple institutions, and very little intention behind where those dollars were going. On paper, she looked successful, but she wasn't getting closer to being accredited, nor was she getting closer to her goals. So, the step one, grow income and assets. First, we walked her through the passive income operating system. Once she put her money into a clear flow, this hub account of fixed expenses, variable expenses, and investments accounts, she finally saw exactly how much she had available every month to grow her wealth. Then we reviewed where her money was trapped, aka that we can't use for passive income. Then she freed up that money, put it into her hub account, which allowed her to start investing in passive income. And with that clarity, Sarah started moving money into short-term rental opportunities. That property brought 1,500 a month in cash flow. Now, instead of that money disappearing because of using the PIOS, it funneled it straight back into her hub account, fueling her next deal.
Nice.
Then step three, and this part's cool, and I know I'm a recovering CPA, so I think it's maybe cooler than most, but we need to reduce taxes. Uh, and once you start investing and being a business owner, a lot more opportunities to take advantage of the tax code, particularly with short-term rentals. Now, the short-term rental also came with some significant tax deductions, which reduced her tax bill by $30,000 in the first year.
Nice.
But because she was incorporating the PIOS, we made sure that those savings didn't get lost. They were redirected right into her hub account, ready to finance the next deal. And then, Cameron, step four would be to reframe your money system. Over time, Sarah's system recycled cash flow plus that tax savings for more deals. Within 3 years, her net worth crossed the $1 million mark, and her income from the business plus passive income streams met the accreditation test as well.
Awesome, fast. So that story is very powerful, right? Someone going from non-accredited to accredited. And what I heard was, or what I liked is it wasn't just about Sarah going out and making more money. It was about her putting a system in place that captured every dollar and then pointed it toward her goal, which was financial freedom.
Exactly. Here's a key point. Sarah didn't win the lottery. She got organized, used a proven system, and turned what she already had into momentum. That's what the PIOS does. It makes accreditation a matter of when, not if.
Nice.
Okay, now Cameron, so if someone's serious about becoming accredited, what sort of mindset should they adopt?
Good question. Mindset, what they need to do is they need to start thinking like an investor and not as a consumer. Investors use money as a tool to grow and create more opportunities. And consumer, they use money to buy stuff. And what I like to say is status, right? You like to look good. The second thing that you got to do is you got to focus on cash flow, not accumulation. I had a great conversation with a gentleman just this morning where he talked about the mindset shift that has taken place just in the last 30 to 45 days. He came across our podcast and he had been solely focused on this accumulation model. In the last
Mhm,
45 days, he's completely abandoned it. And now he is 100% going after creating cash flow. The third thing I would say is you got to play the long game. So if you
mhm.
follow the system, as Anthony said earlier, it's not a matter of if you'll become accredited, but it's just a matter of when.
I take Cam. I really like the attitude. We do need to think long term. And I like how you said consumers use money to buy stuff and status.
Mhm.
I've heard a lot talking about where we buy liabilities, but uh, throwing in the status point of keeping up with with the Joneses was a good value.
Yeah.
Uh, Now, Cameron, what's the first step someone can take right now to move toward accreditation?
Yeah, a few things. The best next step for them would be to measure where you are today, and the way that you can do that is through a personal P&L. We have that resource. If you need it, feel free to reach out to us. But what you want to do is you want to look at your net worth, your income, and then any cash flow. And if we review the credentials that we talked about earlier today, the net worth over $1 million, excluding primary residence, and then income over 300,000 as a household, you may already qualify. I wanted to share this story because I was meeting with a client. This was several weeks ago now at this point, but we brought up the idea of investment opportunities and what to start looking at. And I mentioned that these are going to require accreditation. And he said, I don't know if I qualify. So I jumped to the website, I pulled it up, and he goes, actually, you know what? I think I do. And he said, what should I do now? And I said, well, first thing you should do is how are you going to qualify? Which one of these? And he said, I think it's going to be number 2. And I said, well, great. And I said, reach out to your CPA, have a conversation, write an email and say, hey, I'm looking at this. This is how I think I would qualify. Are you willing to substantiate it? And so this client did qualify. I didn't even know. So one is we got to know the rules. The second thing that you want to do that you can take today is go get a money system in place. That is the passive income operating system. We've harped on this a couple of times throughout this podcast, is because nothing happens by accident. Is you've got to be intentional in life, and you got to be intentional with money if you're trying to get anything accomplished. And then the third thing I would share as far as taking the next step today now is this: achieving financial freedom is not something that you want to do alone. You need to get plugged into a community, specifically an investor community, that's going to expose you to other individuals that are chasing the same goals as you, and it's going to expose you to additional opportunities. Those are going to be the 3 best things that you can do now today.
I'd say, Cameron, I'm sure this was intentional, but everything you listed is what happens when we teach people the PIOS, where we go over their personal profit and loss. We show them how to set up the passive income operating system. And then also, as part of the PIOS, you get into our community that includes over 10,000 people that are practicing infinite banking and are investors. And on that note, Cameron, how does IBC speed up this process?
IBC speeds up this process in really 3 ways. One, it's going to give you a safe, liquid place to store cash while it's growing, right? Is we've got to have our money in a safe, liquid place that's protected. That cash is then leveraged into the passive income opportunities that we've been describing, accelerating both the net worth and absolutely the income that we're able to generate. And then it also keeps you in control instead of handing everything over to Wall Street.
Mm.
Accreditation isn't just a title, it's access to the kinds of investments that can truly buy your time back. If you want a clear path to get there, watch our free webinar on the passive income operating system.
Go to Infinite Wealth Consultants /PIOS, PIOS, and take the first step today towards becoming an accredited investor and financial freedom, where your passive income is more than your monthly expenses. And then you know what else, Cameron?
What's that?
Go make it a fantastic day.
Take care.
The opinions expressed on this podcast are solely those of the hosts and guests and do not constitute financial advice. Always consult a licensed professional for professional decisions. Thanks for listening to the Infinite Wealth Podcast. If you enjoyed today's episode, be sure to subscribe so you don't miss future conversations on building wealth and creating passive income.
You can learn more about infinite banking and get additional resources at infinitewealthconsultants.com. Until next time, keep investing with intention, and remember, your financial freedom is within reach.